You know, when we build a fortress, we obsess over the walls, right? The heavy gates to keep the bad guys out. We focus entirely on the defense.
Right, but I mean, if a fire breaks out inside and you've got to build a simple emergency exit, that impenetrable fortress is suddenly just a trap.
Exactly. And that is exactly what happened to a team of developers during a week of AI trading bot tests. We're exploring their technical notes titled Refining the Exit from May 18th to the 22nd. So welcome to today's deep dive.
Yeah, it's a really fascinating set of logs.
It really is. And the mission for you listening today is understanding why the true secret to algorithmic trading isn't, achieving this flawless win rate. It's actually about mastering the art of the tiny loss.
Which is, I mean, it's incredibly counterintuitive for most people getting into this space.
Mm-hmm.
We are so conditioned to seek out the winning strategy. We can completely neglect what happens when the market actually turns against us.
Right, we just want to win. But reading through these logs, the first massive hurdle wasn't even the strategy itself. It was pure latency.
Oh, absolutely, the speed issue.
Yeah, because you can have the smartest trading AI in the world, but if it's too slow, it's like driving a $1 million sports car. I mean, it doesn't matter if you can hit 200 miles an hour if your brakes take 30 seconds to engage. You're going to crash.
You're definitely going to crash. And that was the exact bottleneck for their GateGrid AI bot. They initially ran it on a local setup, which caused these massive 30-second timeouts just to evaluate the market.
30 seconds in finance.
Yeah, exactly. In this space, a 30-second delay leaves you completely exposed.
So how do you fix the brakes then?
Well, you swap the engine. They upgraded to a Quinn 3.6 40B model. And just to clarify for you listening, a 40B model means it has 40 billion parameters.
That's a massive artificial brain.
It is, yeah.
Yeah.
But utilizing it efficiently allows the bot to process complex risk judgments almost instantly, like evaluating market spreads, the gap between what buyers want to pay and sellers want to accept.
Right, because before the upgrade, GateGrid would eke out these small profits but eat massive losses simply because it couldn't react in time.
Precisely. So with the new speed, they hardwired these multi-stage forced exit rules. The literal millisecond a trend reverses, the bot just cuts the position.
So speed stops the bleeding. But I'm struggling to square this next part. If we look at their LLM Bridge Trader bot, the notes say this was their most balanced advanced planning bot.
It was, yeah. Very sophisticated.
But then on May 22nd, the smartest bot in the room managed to just nuke an entire day's profit in one single trade. Where is the logic failing there?
Well, the logic failed because the AI was given way too much autonomy. It got to decide when to hold or fold, and it essentially got stubborn.
Wait, really? Stubborn? Because AI doesn't have an ego, right?
Hey!
It doesn't get stubborn in the human sense, like some poker player who's pot committer. Are you saying the math was telling it to hold?
Basically, yes. Large language models predict the most likely next step based on historical patterns. So when the market behaved unpredictably, the AI's context window essentially hallucinated a recovery.
Oh, wow. It hallucinated a recovery that wasn't there.
Exactly. It kept finding historical patterns to justify holding the position, assuming the market would eventually bounce back to fit its model.
So it mathematically gaslit itself into holding a bad hand. That is wild.
It really is. So the developers had to step in and build a mathematical babysitter, a strict maximum allowable loss safety net.
Got it. So if a loss hits a predefined threshold, the system just physically overrides the AI's grand plan and forces the exit.
Right, it protects the gains from the AI's own overconfidence.
Which brings up a fascinating question for me. If giving a brilliant AI too much freedom is dangerous, is the solution just to make the bot, dumber? Because that sounds exactly like what they did with their third bot, Bound Sniper.
Well, I wouldn't call it dumber, but certainly more rigid. Bound Sniper was actually the most stable anchor in their portfolio, specifically because it isn't AI-driven at all.
Right, it's entirely rule-based.
Yeah, they didn't even touch the bot's core logic to improve it. They simply tightened its parameters on TradingView.
And TradingView is just the charting software they use to set those trading boundaries, right?
Correct. By narrowing the stop-loss and profit margins on the chart, they aren't swinging for the fences anymore. They mathematically force the bot to stack small, reliable wins while instantly cutting the losses.
So bringing this all together, the developers are taking the logs from these, what they brilliantly call valuable losses, and they're focusing entirely on exit control.
Yeah, they aren't teaching these systems how to win bigger. They're teaching them how to execute a brilliant escape the second a position turns disadvantageous.
which completely shifts the paradigm of success. Winning in this space isn't about avoiding failure at all.
No, not at all. It's about engineering your failures to be as small, as painless, and as rapid as possible.
Like we said at the start, a strong wall is great, but a well-designed fire escape is what actually keeps you alive.
That's a perfect way to look at it.
And it leaves you with this final thought. If the ultimate evolution of an advanced AI trader isn't predicting success, but rather perfectly executing a predefined exit strategy well, where else in your own life or career could you benefit from having an emotionless, algorithmic cut your losses rule?